Welcome, Auvorians, to the Saturday trade week forecast call analysis and all kinds of other fun stuff from yours truly. My name is Steve Vetterl. I am the firm's CMA, the risk manager, tasked with figuring out lots of different stuff, and in some cases, I do it wrong. So welcome again. If you're joining us as a new subscriber, we'd love to have you on the team. Lots of exciting things going on at the organization. Let's kick it off real quickly with the risk disclosure. So if I could get, please, just a quick check on volume. So you guys should be able to see the PowerPoint risk disclosure screen. Hopefully hear me okay. All right, good. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk and could lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets or use any of our software alert products, you should carefully and diligently consider your personal investment objectives, whether or not you can afford to lose the money, level of experience and risk tolerance, and for gosh sakes, please run a demo before you put live money to work in any of our, which will now be close to 7 pieces of software in different systems. So let's just quickly go through the next disclosure screen before I get started here. If you guys are sharing any of the results on any of the Telegram channels or Facebook or any other method, please don't use the term company recommended settings. Okay, essentially the settings come from myself and the other developers of the software and the other educators. Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. They just license software that any of our subscribers can use however they want and at their own risk and discretion. So some software does come with default settings upon initial setup, which our users have the ability to customize their settings however they want. Auvoria Prime has nothing to do with a customer's broker account. We don't recommend brokers. We don't solicit or take investments. We don't do anything as far as running an account for you. So essentially we just license the software. And as our amazing education library is continuing to build and be rolled out, I'm pretty sure we're going to be the first and foremost out there as far as education, whether you want to look at the markets from just a macro perspective or even do a deeper dive into manual trading. So let's take a look at the calendar. By the way, the Q&A window is open. Feel free to ask questions, be as detailed as possible with your questions so that I have, I've got full information. I don't have to read your mind. So let's take a look at Forex Factory calendar for the week. If you guys join these calls, I talk a lot in the beginning about what's going on, news events, just broadly, how it's affecting currencies. I jump a little bit into the accounts, take a look at just some basic technical analysis so I can at least give you an idea of where you should be accepting trades against any particular current or movements in currencies. So this particular week, normally, this week is a big deal. Why? Because under normal conditions, not COVID conditions, this particular week is the Big Jackson Hole Symposium. So the Kansas City Fed hosts this event every year. Now, I figured that, and occasionally Forex Factory gets it wrong, this particular event is actually running on time, but this year it's online, so it's not live. So what does that mean for the currency markets? Well, I took a look at the Kansas City Fed's page, and because I always want to make sure everything's running smoothly as far as a large event. And many of these events have a lot of breakout sessions. The news media covers this just with the same intensity that they cover like a Davos type of meeting, which is the big annual meeting in Davos, Switzerland. And there's a lot of central bankers from around the world at this event. Now, the problem with being online, and I guess this is a good thing for currency land, maybe from the standpoint of somebody not leaking some information and setting certain currencies ablaze, surprising the market with news, this whole thing's going to be online. Okay, so one thing I would suggest that I always suggest in Davos and or Economic Policy Symposium week, which is always the last week in August, is unless you trade all week long, I just would not be trading Thursday or Friday. It's just me. Not going to be really trading anything Thursday or Friday, currency, future, forex, anything land, because I want to see what's going to be said. Okay, so even though this is going to be online, there still is that chance of some central banker or one of their minions just coming out and saying something that the market is not expecting, thus being a much more volatile time than that. Other than that, I don't really see anything standing in the way of trading. So the developers of Einstein and Alexander are trading this week. Actually had an opportunity to talk with them on Friday for a few things. Really nothing related to the software, so I don't really have any updates in that area. I know that with some of the questions that I've gotten with the release of the 4 other pieces of software, I'm as purposely try to remain as little plugged in as possible, because I don't want to promise the release of the software, but it's really important from the standpoint of keeping your up and down lines in the loop, that the weekly calls that the management at Auvoria does, you guys watch into. And as things get closer to implementation and or release, and some dates come out, I can certainly share that with you. One thing I can share is that I've been paying a much deeper attention to one of the first products to come out, which I paid a fair amount of time in last week. It's a product called Variable, developers San, and he's going to be doing calls on settings, which isn't really changeable from the standpoint of the software. But the performance of this software has just been outstanding. One thing I do like about the software is occasionally, maybe once or twice a quarter, hopefully that continues, it'll catch a trade that just sails in distance. It caught almost 117 pip move on March 31st, which is a pretty big move. So as far as news, events, so forth, our legislative branch is actually on vacation still. They're out of session. That's the case for a lot of other legislative branches and some executives as well around the world. So that's kind of what's going on with us. Not a lot of news. Let's take a quick look at the dollar. This is the DXY. This is a daily chart. You're looking at tradingview.com. It's actually really good software. So as I've been showing, we had if you follow the dotted lines here, we had a huge protracted move, really stretched in the grand scheme of things, in my opinion, throughout the month of July, bringing terror to those on the wrong side of this trade or your accounts. But typically after a move, you'll have a basing period, which we've had. Of note, last week was the dollar dipped under this line. Pretty important area, at least as far as short terms goes. Dipped under this line and immediately reversed. Now we're back up into what I said would be probably a fair amount of time. We're looking at what now? 1, 2, 3, 4, 5, 6, 7, 8, 10. Almost 20 days that we've been basing inside this, I guess, arguably 92 to 94 range on the DXY. Doesn't mean if we're going to stay in this range. But we've put in a decent amount of time basing. Doesn't mean we couldn't do twice this time and go through the rest of the summer, which is entirely possible, which is essentially another week or two before normally the Labor Day weekend. As far as the holidays in the United States here, I don't really see anything happening. So usually this time, if it's just a basing period that's going on, I'm more okay with trading. So I don't really have any prognostications other than it came right back up once it dipped under. Now we're back inside arguably what is a base. So let's take a look at Just quickly S&P. Notice we're flirting around with the highs. Typically, as you come into these areas and the volume is lower and it's lighter in the summer, if you don't get some sort of move above an all-time high, it's probably going to turn back down. Can't say that's 100% confidence in that. It's just my thoughts in the S&P. So we've been lightening up on risk in client accounts that are older and need income as far as being heavy in stock exposure. So let's take a look at Euro US dollar. Again, stuck inside that range. It's almost a complete upside down reverse of the DXY chart. This has been a rough time for US dollar bulls. A lot of them were bullish into this period of time, and they were bearish the euro. And this trade caught, as you can certainly read if you Google it, this trade caught a lot of institutions off guard. So there's a fair amount of institutional trading that lost chunks of money throughout this period of time. So, will we drop back under the 17 level, which is a short-term floor or a support point at this point, or will we bust up above the 19 area and spend some time ultimately, in my opinion, headed to 125? So same thing on the DXY. If you switch out to the monthly chart, you can see ultimately where I think this is heading, which is 85. When, how long, what's it going to happen? These are all forecasts, and you guys know what forecasters are called in this industry, right? I mean, we all can make a forecast, but I could be dead wrong in the direction, right? Generally, price action's telling me it wants to head in that direction. So let's take a look at GBP USD. So drop back to the daily chart first. So here we sit, not really going anything as far as movement, just lots of doji candles, as you've noticed up here. But we had a little bit bigger moves the last 4 days in this last week. So I don't really have any insight on that. One of the cool things, if you guys want to do a little deeper dive, is, and I posted on my Telegram channel last week late, a super good piece on risk and understanding risk. Now, it's using Bitcoin and the US dollar as an example, but the chart doesn't matter. It doesn't matter what it's on. The points of risk in terms of putting positions on. This already you'd read more from the perspective of a manual trader, in my opinion, but I thought it was an excellent piece. So I've started to do a little bit of a deeper dive into some of the forums on TradingView, and I'll tell you, man, there's some really good stuff on there. If you guys haven't seen this yet, I have nothing to do with the software. I have no affiliation, but it's really served me well in the 2 months that I've been using it. And since time's freed up for me a little bit more this week, I had a chance to take a deeper dive on some of our new softwares, market events, all that fun stuff, and see that just some really good. There's a lot of people on here that post a lot of different indicators and all that, which can probably confuse our general subscribership. But if you guys want to, sort of take that extra step, as I always recommend, and learn just at least the basics of what I like to call macro technical analysis. This is really just price action of candles and maybe a few indicators. It'll really help you get a feel for what's going on. And you can carry this type of knowledge into anything. So if you're building up retirement accounts, whatever country you're in, if it's a 401k, if you're in the US, it'll help you understand how to diversify your accounts. How much would you want to have in stocks versus bonds, right? Aggressive versus conservative. You can apply this charting to anything. Prices of cars, homes, art, for that matter. I mean, anything can be put on a chart if you have enough good, sustainable, long-term data in which to chart it. So let's take a look at the accounts. So here is the demo we're running of our alternate currency ring. And this account right now has done quite well. Here's the settings real quick. I show these a lot. Sorry if this is getting a bit, but this essentially is the high volatility settings here. Here's the performance on the account is right here. So the account's done well, you guys, you know. So it's taking the trades for you. It's not Alexander, so it's Einstein here. It's demo. We're running, as you guys can see, the summary here: GBP USD, NZD, US, CAD. We've got a mix of all in here. All have been moderately contributing to profits. Win rates have been pretty solid on this as far as running. These are, ideal win rates. But I never really talked as far as risk much about win rates. You can have an account grow exceptionally well with the win rates in the mid 50s. If you're taking little bits of losses or you're cutting essentially trades that aren't going for you, or the software's cutting trades that aren't going for it quickly, you can have win rates in the 50s and that would still be good. So when you guys are going to start to see some analysis of variable, which is just absolutely clobbered it since last fall when they started putting this FX book together. I mean, it has win rates in the mid 50s, and that the account has had almost a tenfold return. Now, granted, part of that return was catching a few trades that just absolutely sailed on you in this account, or I should say the other account. So, and I'm going to show that to you guys once I get some clearance to do a little deeper dive into the software as we're coming out. But if you haven't seen some of the review calls with the developers and or Auvoria management, you can chase down the Telegram channel some of the calls that took place if you want to understand what's going on with some of the other software. But essentially, this is an alternate ring. It's traded with high volatility settings, counts up about 30%, but it is currently in a $581 drawdown. Okay. Hasn't closed out these trades. As you guys can see here, we're now a month out from some trades that are taking some pretty big heat. And to keep in mind, in this account, we have a 400 pip stop loss, right? And one of these trades is real close right now to just being cut, which kind of stinks. But maybe it's time to cut some of the losers here so they don't continue to get tortured. But overall, it's actually done well with this pair. Let's take a look at the big account. Actually, let's go back. Take a look at that. Okay, so last week, about a 0.83% return. So far the month, this is doing better than, this is the second best performance this year in this account. Again, this is run 0.01 per 3K, denominated in euros, real money, Einstein, running on high volatility settings. So those of you may not understand what that is. These are the high volatility settings here. Essentially, these two are flip-flopped out of the box. Okay, so you're changing those settings. 400 pip stop loss. That's pretty much all I want to say about that. Greg, the question Greg asked, which actually just dovetails perfectly into what I just finished saying, it says, curious as to how you pick the three pairs in the alt ring. They're not actually a ring, right? I just kind of call them a ring, so maybe not the best speak. But this was chosen because, and I give all the credit to Jesse, who is our master Johnny Neutron data guy. He found essentially these acted the best over the deep dives of data that he has done with Alexander and Einstein over a long period of time. The current ring that we run was the least risky, essentially the normal ring that I always talk about. But this was our alt ring, essentially some US dollar, obviously in here, some, but all the other currencies are unrelated to the other rings that we trade. But this is actually done pretty well. So what else do I want to say about this? So all in all, I mean, yeah, counts in a 5% drawdown right now, but I'm not concerned about it. it's done pretty well this month, in all fairness. Win rates, again, looking solid. Yeah, so I'm we have a lot of my FX books hooked up to this. As you guys can see, we're hooked up to all kinds of stuff inside our sort of master FX book account here. So I get a couple of requests here to show the Gearbox scalp. I'm going to let Tyler take that baby. I'm not going to sort of run with any of this until the softwares have been released. I affectionately refer to the scalp account as the bananas account. So there's good and bad to that, by the way. But when we're ready to release it, we'll show you guys all that stuff. Hey, Bajan, how are you doing, Bo? What's happening, brother? Haven't talked to you in a while. Give me a call sometime, dude. I know you guys have been tied up. I'm not sure if you guys are moving or not, so give me a ring. Next question. Closing the week I had ended with about 8.77 drawdown with a buy trade on Euro USD level 5. What would you recommend I do going this week? So as I tell a lot of people that have asked questions like this, let it play out. Essentially, I'm not going to stand up here and try and make prognostications or claim that I'm smarter than the software. It has the ability to pull you out of drawdown. Just give it some time. Let's see what else. That's actually a good question. Nick asks, will there be individual Telegram channels for each software? I assume so. So if anybody from corporate's on this call and I'm wrong, please correct me on that. But I will certainly suggest that because I think that's smart. Even though I'm not a developer, my Telegram channel and my role as risk manager and understanding news events and forecasting and looking back at what happened and stuff. I still think it's important to have each person that is running or groups have their own Telegram channel. Can share the 3K Einstein account weekly performance. Let's take a look. Oh, let's switch over. So here is, here is the 3-ring main account we trade. This is our live account. This is a Euro JPY, Euro USD, USD JPY ring, a true ring. Okay. So this account started, I always do an all history download just so I can get full. So we started this account way back in 6/1. And the account has, here's the settings, high volatility settings. We now have a 5. Actually, cancel that out. Here we go. So here's the settings. So high volatility settings here. Okay. 500 pip stop loss. Keep in mind, this is a trailing equity. We do not have fixed weekly goal. For those of you who do not understand what that is, you can ask a question about that, but I would highly suggest going through my Telegram channel. I've covered a lot of this in previous Saturday calls, which I always recommend going through as well. Can take a fair amount of time, but where there's a will, there's a way, right? Let's go take a look at the account inside. Oh, here it is. I keep forgetting to move this account around. Okay, so here's the account on my FX book. You see this account's still holding some trades that it's been terrorized on for a little more than a month. This account was actually doing pretty well. It's up about 14% until we just had terror unleashed in the US dollar, and it's just taking this account down. But as you guys can see, the accounts had almost a 4% reverse back in terms of the equity growth just in the last couple of days. So that's a positive trajectory that hopefully we'll pull out of. But this account's just been tortured if you look at the history on some of this stuff. I always go into history, and then I will sort by net profit, because even though it shows you the worst trade right here, I want to see the grid of them. Okay, so why were these trades bad? Well, let's just take a look at this. What do you see that is evident on all of these trades, right? 250, 250, 250. See that? We didn't have the stop loss high enough. You know, there will always be those that say, well, geez, you know, if you took the trade out at 250, you took the stop loss, maybe you saved the account from further drawdown. It's possible, but the data shows that if you're willing to cast a wider net of drawdown inside the account, software has a better chance of pulling you out. So, you know, there's one common theme other than the fact that these trades were all losses. They were all taken as losses because the 250 pips, as you can see, hit. I don't know what happened here, but you know, essentially they were all taken. So we've upped it to 500. Doesn't mean you have to go out and do that. Make sure I'm in the right account. Doesn't mean you have to go out and change this yourself. It all depends. I mean, the same thing with total account equity risk. That answers your question. All right, next question. Okay, so Dylan's a pretty smart guy. He's always done some pretty good work, and we appreciate him. You know, I putting some ads in here so someone can read what Dylan wrote. So I guess he's had some different stuff he was sharing with us. He's basically said, I've been having great results with high volatility settings on the following 4 pairs. Okay, so we're just essentially no repeating currency. So Euro USD, NZD, CHF, GBP, JPY, right, and AUD CAD. So it just adjusts the starting lot size accordingly, of course, because it's 4 pairs. So just keep that in mind, guys. Doesn't mean you need to switch your stuff around. So you don't need to ask me 50 questions about, should we now, shift? It's just more data. You know, the more we all work together, because remember, guys, I'm still learning this software and the trading myself. I don't come into this with 10 years of experience of algos and expert advisor software on the MT4 platform. So, I mean, I've always dabbled with this stuff in the past, but never to the degree that I am now. So we learn together. Thank you, Dylan. Keep the stuff coming, brother. Can you please direct me to a session where you have covered how to connect trading account with my FX book? So that is on my Telegram channel. There's a bunch of YouTube videos out there that do it. I claim to be an idiot on it, which I basically am when it comes to this stuff. So I just divert to some of our team guys that are experts at doing this, like Patrick and so forth. They hook a lot of these accounts up for me. Is this setting used for the 3rd trade? Not sure what that means, if you want to rephrase the question. Yeah, so Jenna asked, can you explain the difference between gain? Okay, so if you're watching screen, Jenna, here's the gain. You just hover over it. And here's the absolute. So essentially, in this particular case, they're the same. But if you go to, let's go to the big account. See, they're different. So this is the time-weighted return. So it measures performance of the what they call TWR. And then, and by the way, this is the interesting thing about this is what's called GIPS compliancy. So you guys can actually Google this if you've never heard of what the heck I'm saying. This is an organization out there that is exceptionally difficult to get that rubber stamp of these guys on your investment performance. But if you can attain GIPS compliancy standard, which is part of the CFA Institute. It's some of the best out there. It's basically almost saying that, we have implemented, it's like an ISO 9001 type of certification for your manufacturing facilities, right? And there's a bazillion different kinds of ISOs out there, but it's basically one of the highest levels of performance measuring standards. And the CFA Institute stands for Chartered Financial Analysts. Remember, about 3% of the people in my industry have a CFA certification. It is the highest level and by far the best of any license that one can hold. Although you can have a CFA, but doesn't mean you're a Series 65 RA like I am. But a lot of people joke around in this industry. Oh yeah, well, our financial advisor has a CFP, which I do not, by the way, because the vast majority of the people that have gone through the certified financial planner couldn't trade their way out of a paper bag, and they're just a bunch of salespeople. So I always thought it was a hokey ass title to have behind your name. So I've never gone after the CFP. I've also saved myself $6,000 in the meantime too. But CFA is for real, something that I hope to attain at some point, but it is one of the most difficult exams on this planet. All right. Anyway, so yeah, just go to the Telegram channel and you see the FX book. Would you always keep the close our trail day to Wednesday, hour 14? The only reason you see that, and I'll show everybody where that is here. So in this case, we have a fixed weekly goal going. So let me just jump back to the other one and show you guys with the trailing equity. Our closeout day is Friday. Why? Because we want to give it as much opportunity as possible in the software. If you're up, essentially, and you want to trail by a certain percentage, in this case 1%, which is the default setting, I want to give it all week to do that. Some will have this closeout trail day at Wednesday. So the reason it's set Wednesday is because just statistically, over any period of time, most of the trade setups for any kind of Forex currency have a much lower win rate on Thursdays and Fridays. It can be due to a multitude of factors, mostly just probably craziness, lack of liquidity, too much juxtapositioning for the weekend, that kind of stuff. So those are the reasons for the difference. But we have it set on Friday. Once the stop loss is hit, does the trade get taken and you have lost your investment? Yes, that is correct. Let me take a peek through the chat window here. Bear with me a second, guys. Last week you mentioned trading with the channel for more success. When do you consider a channel created after how many candles? Okay, so here is a technical analysis question. Let's go to the S&P to answer this. Look like the software wants to adjust, huh? So the argument is, when is a trend created? I would say there's a varying degree of, and this is totally ambiguous as far as the subject because there's no fine answer to it. This is a trend channel, albeit a sloppy one that I'm drawing. This is a trend channel, okay? Notice how, I probably could draw this better, but the point for just discussion is that notice it hasn't broken out of the trend, right? Now, we're getting close to touching the bottom of the trend, arguably, however I draw it, on a daily chart. Trend lines on dailies, weeklies, and monthly charts are much, much more dependable than stuff on a smaller time frame. Okay, so you can sort of bet more on that. With a lot of the institutional hedge funds around the world that trade in equity land or whatever the particular instrument is you're trading, they will have all kinds of channels drawn on daily and weekly charts. They may look to lighten up or break out of positions or sell or buy, depending on how the breakouts of those channels go. But they're much more dependable on the higher time frame you go. How many candles starts a trend? I would want to say at least 5 in a particular direction. If you're on a daily chart, weekly charts, more than a few. Anything that's on a smaller time frame, like a 4-hour, which is a 240, or an hour, which is a 60, you're going to probably want to see a little bit more for that. But you can draw trend lines, and heck, you look close enough, you can see a trend line anywhere. So it becomes kind of a negative if you do it too much. All right, we're coming up on 10:38. My suggestion, or my homework assignment, if you guys will, this week is find in your group, which we found a couple individuals in our organization last week that were sort of like the ones that haven't had the time, maybe they haven't been shown the direction, and just haven't gone through any of this. So we found a couple individuals in our team that, always claimed to never have any time, but once we broke their schedules down, even with families and careers and all that fun stuff, they had time to go through and catch up on a lot of this. It was just a matter of where there's a will, there's a way. So I would challenge everybody, as we did our team this week, to get out and take some time and go through my previous calls, and or go through the Telegram channels so you can get up to speed on what's going on. You don't have to have this stuff mastered, right? I touch on a lot of this just real briefly. I actually haven't shown. Sorry, I know that that question you. Here's the USD JPY. Okay, it's just a daily chart. I'm really not seeing anything going on here to speak of. I mean, we're in a tight channel, it's arguably somewhere right in here to here. Nothing going on. This one had a reversal. But keep in mind with Euro JPY, which is, I guess, sort of our least favorite currency. Maybe that's why I don't show it that much. Because I try not to show stuff where I think you're going to get too much of a read off, and it's going to confuse, what the general tactical or strategic type of direction for the other pairs is. A lot of times these currencies get led around by other factors, mostly right now just the US dollar. But had a pretty significant back off in Euro JPY just in the last 5-6 days, topped out. So you always want to take a look at a longer term chart back to a week, and you can see this is pretty, I don't know, maybe it's tertiary line of resistance that it came up against, right in the 126 area, that reversed off it. And now essentially it's holding right now with the 200-day moving average, which is the green line that you see right here, which is just an average of price. And actually, you know what? I think I'm going to add another indicator to these charts. It's what's called a VWAP. Not sure if you guys have heard of this, but it's a volume weighted average price. These can be exceptionally effective if they're drawn from points of recent swing highs or lows. So I know I'm not looking to confuse you guys on this, but I would say I want to take a little extra step further in technical analysis each week. I'll be bringing in some VWAPs. These are difficult to draw if you don't understand what's called fractals. So essentially you're looking to pick particular points in either high or low periods to start drawing. Essentially, like right here, example, if this was our period, we could draw it from the 137.25 area, and then have the actual average weight showing the price throughout just that period of time, instead of looking at a 200-day, which is moving back to a much longer time. So a lot of times you'll see a more, accurate, maybe a little more of a updated real average weighted price from a moving average from a particular high or low. And they become, in some cases, much more effective. In certain equities, these are exceptionally effective in trading. So maybe I'll show some of that. Okay. I've hit level 9 on Euro USD since we use reverse trend strategy. If the value of the US dollar strengthens, would I be in a good position starting next week? Well, yeah, I mean, just looking at the euro US dollar here, and switch out, we're on a weekly. Let's go to a daily chart. You know, we're still jumping around inside the fray right here. So in order for that, you know, especially on a level 9 of that sequence, you'd really want to see the weakness, you know, really start to hit and move out of this range. So I would just hold tight on that if it hasn't taken you out on the stop. Do we think the trades that hit stop loss lately would have come back around with the doubling breathing room, or might they still be going deeper into red? It's just a difficult question to answer, Dan. Basically, at this point, we're still looking for the euro to rip to 125 at some point, and the dollar down to the 85 area. You know, which for any trades that are obviously the opposite, essentially shorts on the euro US dollar in any of the sequences for Einstein or Alexander, it's a tough game to play against right now. You know, as I said, when we had this level moving here and we were continuing to, you know, had I been managing had I been managing Alexander trades, I would not have accepted any euro US dollar shorts throughout this whole period of time. Just because we're moving up, we broke past an important area. I don't know if you guys can see this, but this is a cup and handle pattern. This is a very accurate chart breakout pattern. So here's the cup portion, here's the handle. You know, especially if this is a more of a protracted type of base, you know, it's essentially, this is a breakout point right here. I talked about this ad nauseum in a lot of our. So when this broke from this chart pattern, essentially a bullish pattern, one of the most out there, I would not have accepted any shorts on the way up. And it's almost too bad. And this is where a good trend following software, especially with that question was asked earlier around surrounding trend, I'm much more willing to take a trend up, in this case long, because of the pattern that it broke out of. And there's other patterns out there. And eventually I'll talk to you guys about double bottoms and, you know, island reversals and some of the other stuff. And this is all completely Googleable stuff. I mean, there's tons of websites out there on technical analysis, chart patterns. So you want to just be able to recognize them on daily, weeklies, and maybe even the 240-minute charts. No, Dan, you can't. But you can turn off Einstein. You can essentially turn off the software from taking new trades. I mean, the question is taking a look at how long it's going to be inside the range. It's crystal ball questions. I can't answer that because I don't know when it's going to break out. I mean, there's little tells in here that it's getting a bit old, or it's spending a fair amount of time inside the range, maybe looking to break out higher or lower. But I mean, ultimately, when you have a breakout from this type of pattern, you usually have a pretty extended move to the next area. And who knows? I mean, you're taking a look at a weekly chart, just dropping back to a higher time frame. You know, you can see here, it doesn't really look like anything more than a pause to me. You know, ultimately, this is the big area right in here, this whole 125 area. You know, we've capped out here many times, especially if you go back to the monthly chart. Look how big of support this area is. And we held this on multiple years until 2014. And, you know, we absolutely just crashed below it. And since then, it has been a big area of resistance to the upside. This is a very long-term chart when you're looking at a monthly chart. That's why you want to look back to see the strength of a particular support and resistance. These areas will often act as magnets, just like that 85 area on the long-term chart for the DXY. right. I tell you, this is I've seen this before, and um, I know. I guess I'm kind of lucky here in San Diego in the Temecula area of SoCal, because there's a lot of us that occasionally get together and meet. Some of us are friends, so forth. But if you guys ever want to, sort of put groups to get traders together to meet, I know it's tough with a lot of restaurants closed and stuff in the country, but once everything opens back up, I would highly encourage doing the weekly meetings. Having somebody talk, and heck, you could all just meet, in an office like we occasionally do over my office. Just have coffee. If you have a big whiteboard, just get up there and talk about whatever. Build a new organization if you're an affiliate, and a couple of other things. So, the question was asked: do you ever look at open interest or any yields for fundamental analysis? So, not in Forex land, because the problem I have with Forex land, which is something everybody's probably sick of hearing me talk about, has been listening to me for a long time, is there's just not a lot of really good aggregated volume out there. Now, on other instruments like the futures markets, or any, obviously, equity that trades around the world, you do get a good quality data, and that's an aggregated volume. If I can get that, I'm much more interested in open interest on a particular contract. So there's a website out there. There's actually a bunch of them that pull from it, but there's a website out there that the CME has posted called a Commitment of Traders. And it shows a little bit of this, albeit in a generic form, on Forex Factory. But I like the FinViz, which I'm going to here. This is just finviz.com. This is actually pretty cool because if you go to the futures area, there's a whole dashboard of everything that's going on around the world. So across the bottom, all the currencies. So even though I like TradingView, I can't get this quick hit stuff, right? So we're looking at this on a daily chart, and I can just go along and see what's going on in the dollar, euro, right? Boom, 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 all the way down, and see what's going on with all the currencies. And then just looking at them on a daily time for just the charts as a whole, you can view them this way. This is how I can begin to see whether these markets are breaking from other markets. It's what's called becoming uncorrelated, or if there's stronger correlation developing among anything. Because as much as I hate the metals, I've sort of been forced to follow the metals recently, especially with the fact that they're completely harnessing all the gold bugs out of there are coming out of the woodwork. So especially with gold, which you guys can see is absolutely ripped up, especially looking back on a weekly chart, and what it's done. And it's been looking really strong. All right. What other questions do we have? So question I asked, can you show the golden cross on the euro US dollar and give a comment? So typically what's called a golden cross, if you guys want to Google it, you can see what it is. But essentially a golden cross is when the 200-day and the 50-day converge, or essentially cross. That just becomes either a positive or a negative. But you can always go in and add an indicator over this. I choose to just keep it simple because I post this a lot. I actually also print this chart off a lot, along with the SPX for different clients. So I try not to muck it up so they can understand what's going on. But most of my clients get used to seeing these charts, so they can understand strategically what we're doing with their portfolio. All right. I'm going to end it there, you guys. If you have any questions, you can always send me an email, svettorel, VETTOREL, at AuvoriaPrime.com. Wishing everybody a safe weekend, whatever you're doing. And get out and learn something about Forex. Have a great weekend, guys.